Hello, this is Manish Patel with IMTF Trade. Today is January 12th, 2019. I want to give a market update for the U.S. stock markets to quickly go through and see exactly where we're at because we're right in the middle of the month. Option expiry, everything's pretty much here. It's a critical time, believe it or not, because a lot of people judge to see exactly what happens at the beginning of the year to kind of assess what's going for the rest of the year. A lot of people even evaluate what you call dogs of the Dow strategy, which I will put out a video very soon on that too. Here's the VIX. We normally look at the VIX and the E-mini S&P 500 futures to judge the market. Here's the VIX, and as you guys seen previous videos, we use the VIX and the E-minis to judge the market and see exactly where it's going. We look at the weekly time frame if we need to. We'll go down to daily or monthly, but we stick to the weekly, which gives us a long-term view. The VIX is the volatility index for the S&P 500. It's an inverse relationship to the stock market. That means if the VIX is going down, stock market goes up. VIX goes down, up. The stock market goes down. We have two zones here. This is the bottom zone here, right there between 1999 and 1146, and the top zone, which is 1999 to 2945. If you're in a top zone, that basically means the market's either bearish consolidating or bearish trending. If you're in a bottom zone, you're pretty much in a bullish consolidation or bullish trending type of situation. The closer you are to the middle, that's more towards the consolidation part. The more towards you're at the middle of these zones to the bottom or the top of them, the more start trending you get into. You could see here we've after the last couple of weeks, a lot of volatility since the beginning of December. You could see here we closed above this zone. We kind of lived up to that zone, got to the resistance here, which was basically telling us we're bearish trending. And this week we finally closed below that zone, which means basically the bearish trend is over. Now we're going to pretty much enter a consolidation pattern until a trend develops and where the VIX starts to go down. Let's quickly look at the daily time frame because I did put out on social media here, and I did sit there and talk about here. We're basically on this day here, which is Thursday, January 10th, we closed below that level. That was a very good sign now that pretty much the bearish trend is pretty much over. Doesn't mean we're not going to sit there and consolidate back and forth around this line. We can, but that basically means right now we're in a bullish consolidation pattern here, which is a very good sign for the bulls and bad sign for the bears. And you could see here we closed below it. We kind of pulled back to that level during the day yesterday, and then we closed below it. So that's a very good sign. Now we need one of these red shaded areas to develop here on the daily time frame, which is very critical for us to see in order for this bullish consolidation pattern to enter a bullish trend. And what I typically like to do is look down at the 4-hour here and see exactly where we're going here. You can see we have a bearish red signal here. That's a good sign. So we really need this to sit there and trigger and to keep on going lower. Once this is set up here on the 240, then we know that we're going to enter a bullish trend for the U.S. stock market, which is a very good sign. Let's go to the E-mini S&P 500 futures and go from there. Here is the E-mini S&P 500 futures. This is the weekly time frame. You can see we got below the cloud here. We triggered the bearish setup here. We went down, went all the way down to here, lived here. We kind of held these supports here. Notice these multiple time frame supports. This is the major support that started this bullish trend right there, that last big leg, and that's kind of where we held it. And then we sat there and we came to a critical point. This is a major resistance, which is pretty much what we're looking at here, which is at 25.65.25. We broke that level, which is a good sign. Now, as long as we maintain this level here and stay above it, we still have a chance to sit there and come back above this cloud and enter a bullish trend on the lower time frames, which is a very good sign. So this right now is still a major pullback for this bullish trend. It does not mean the bearish trend has developed at all. If this pivot here gets broken, then basically means we're going to enter a bear scenario long term for the E-mini for the first time. But you could see here for the longest time we really have not gone and did that at all. We had a couple of bleeps here, not much at all, but this is the first time we've actually gone below the cloud here. We triggered the bearish setup and we really haven't followed through. And the whole reason why we haven't followed through is due to this monthly time frame here. And you could see here, and I'll show you this why. right here, this was critical. The whole reason why we have not sat there and entered a bearish trend going downwards, and that's still a major pullback for the bullish trend on the weekly, is because this fact right here is that we have yet to sit there and close below the green line on the monthly time frame. When we close below the green line on the monthly time frame, that's when the bearish everything on the weekly time frame, everything will enter a bearish trend, and at that point we got a major problem for the US stock markets. But as long as we sit there at the end of the month, keep on closing above this green line, I'm okay with it. Right now you kind of want this price action here by the end of the month to kind of get up to this level here, this resistance level of 26.31, and break it. So that's one thing we are looking for in January, is for it to sit there and break the 26.31 level. If it does not, this could be a major resistance going into February, which could be a problem for the month of February and so forth. So that's going to be very critical for us to see, because you really don't want this to be a resistance. If it does, it's going to bounce off there and then try to head to this cloud, which is not going to be a good sign at all. So it's very critical right now where we're at. Okay. If you guys have any questions, you can email us at info@eiicapital.com. Thank you.